By the way, listen, guys, you're not dummies. Certain things go on, big trades happen, and then announcements come out and move markets.
Yes.
And so don't kid yourself. A lot of people in Washington knew that this bill wasn't getting passed, and some of that capitulation took place ahead of the rest of us figuring that out.
Yeah.
I think this thing will grind higher, and I think once that legislation does pass, it's going to open a floodgate of activity in the money center banks in the United States. And remember, that's the real circulatory system for global capitalism. And so this is a small asset class relative to the other asset classes that it should be compared to.
According to Anthony Scaramucci, this isn't a failure of Bitcoin's narrative. It's a symptom of a massive demographic divide. On one side, you have the 60-year-old guard, the institutional titans and sovereign wealth managers who still default to the safety of gold and silver. On the other side, the younger generation is ready to embrace a digital standard, but they don't yet control the big money. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
But I think we are learning about the demography of crypto, because if you have a currency debasement going on, you would have expected Bitcoin to do much better. But it turns out that 60-year-old people, and I'm over 60, but 60-year-old people have a tendency to buy gold and silver. And guess what? 60-year-old people are running most of the money at these big institutions around the world and the sovereign wealth funds and things like that. And so they left Bitcoin and other assets that we would like, and perhaps younger demographies like. And I think that's the big issue right now. That's the tension in the marketplace. And I predict, like most bear markets, it will end when we least expect it. But the RSI is below 30. The greed index on a 0 to 100 is at a 5 in terms of where it is as it relates to fear. And there were a lot of bearish people in that room yesterday. So I take that as a good sign. Having lived through 9 bear markets, when people are telling me they're bearish, they're typically talking their book, and that means that they're underinvested. Kevin felt badly burned by Sam. Sam owned a tremendous amount of Solana. And, I see it differently. Maybe I'm too short to see the glass anything other than half full. Like when I'm looking at the glass, it looks full to me. And I look at Solana as an engine that powered through the FTX crisis. I think he felt burnt by the whole situation. So it's sort of a hot stove he doesn't want to touch twice. Bought it at 22. On it, it was down from like 200 and change. We bought it at 22 and it didn't stop. It kept falling. And we ended up with it at 8, and we looked at each other and said, all right, we're going to ride this thing to 0. Which I didn't think it was going to 0. And if you went to Solana Accelerate, you can see why it's not going to 0. And so we held on, and I think they've generally done a good job. Is it down from its high? But remember, the industry got impaired by the Trump coins. People don't like talking about it because they're nervous about the administration, but the truth be told, the Trump coin sucked a lot of liquidity out of that space. And if you really look at the bear market, in my mind, the bear market really started last January. It didn't really impact Bitcoin until October, but go take a look at the coins that are not Bitcoin, or as you guys say, the altcoins. They haven't done well since last January. So to me, that's a positive, because bear markets typically last about 12 to 18 months. So we're more than 2/3 the way through the bear market. And say, well, weirdly, the meme coins have fortified the case to use Solana for real-world assets, because just take a look at the Trump coin activity prior to the inauguration, and look at the volume that Solana was handling, and look at the transaction speeds on Solana during that big throughput coming through the pipe of Solana. And so weirdly, you would say, well, the meme coins should probably hurt this because meme coins are garbage, et cetera. But if you're a technologist and you're looking at Solana, you're saying, wow, Solana can handle a lot of activity. And it's cheap, it's easy to use, developers find it user-friendly. And I'll channel some, since I've channeled Kevin O'Leary, I'll channel some Anatoly here as well.
Scaramucci views Solana as a technological powerhouse that proved its durability by surviving the absolute worst-case scenario. It didn't go to 0. Instead, it built a faster, cheaper, and more developer-friendly ecosystem. Paradoxically, the explosion of Trump coins and memecoin mania in 2025 provided the ultimate stress test for the network.
Solana is built without a lot of innovation. He took the best parts of what he understood about computer programming and cryptographic blockchain and put it in Solana. And so what was he searching for? Speed, durability, very fast finality, and something that a developer could look at and say, this is easy for me to use. And so for all those things, I think Solana has met those tests. And Solana, to me, not being Bitcoin, is an anti-fragile layer one that I think is going to get adopted. I'm not saying it's going to be the only thing that gets adopted, but guys like Larry Fink, don't go by me, go by Tom Farley, go the former president of the New York Stock Exchange. Yeah. That world is changing. And just to really date myself, I was T+5 when I was your age. So if you were with me at Goldman Sachs in 1989, and you bought a security, it went through 7 different agencies before it got to your account, including the Depository Trust Corporation, and it took 5 days. Okay, so you got the trade here, but you didn't see it in your account for a week. Today we're T+1, and you guys know on Solana we could be an hour. We could probably be less than that, but of course you're going to have some regulatory oversight that's going to slow things down. When you look at Washington, right? Washington is very different from crypto. It's very different from Wall Street, and I've got my 11-day PhD, so I can tell you how it works. What ends up happening there is there's varied interests, and so you have to measure everybody's interest. You know, on Wall Street we all like money. In crypto we all like money, so we know the interest, right? We're all on the green team, but in Washington there's blue, red, purple teams, there's all different types of stuff. And if you sit down and you just look at everybody's interest, the White House, the industry, the banking community, the Democrats, the Republicans in the House and Senate, they all have a mutuality of interest to get it passed. Now the bad news for the industry, it's not going to be what we want. Okay, generally we're libertarians and we want to be left alone, and Washington doesn't know how to do that. And the American Banking Association has a lot of draw, a lot of swag with the Congress. And so they're going to push back on some of the competition that the crypto industry wants to give them. And that's Washington. That's the way it works. That's why they say you don't want to see the sausage being made in Washington. You just want the final product, right? It's a nasty process. And so I'll predict that the legislation gets done. It will not be as good as we would like it to be. But I would tell you that progress is more important than perfection. In fact, the enemy of progress is perfection. And I'll just give this quick example, and I did mention it to Tom this morning from the stage. When Gary Gensler was forced, literally by a judge, to approve the cash or spot Bitcoin ETF, he didn't want you to be able to put Bitcoin into it. And so everyone was complaining about it, but we got it done. And now with Paul Atkins, we've been able to make that change. And so that's what we have to hope for with these pieces of legislation that are coming forward, and I think they will pass. I admire Brian. I admire his position on this. The truth of the matter is, if you look at the reward system that's in place at Coinbase, he could relent on this, and they would just be fine economically in terms of the way the reward system is going to potentially work in this legislation. So I think it's a tribute to Brian that he's a pretty principled guy and he's anchored towards this idea. Now, if I were talking to the banks and I was going to give them advice, I would say, hey guys, this is going to happen whether you like it or not. Okay, you're the taxi cab industry and Uber's coming into town. So you can either fix what's going wrong in the taxi cab industry or Uber's going to eat your lunch. Okay, so for me, it's more advice to the banking executives than to Brian. You know.
Totally.
But I think you're making the point, Brian, relax, get the deal done, and let's move forward. And I think we're generally going to go in that direction, likely before Memorial Day,
You said that you think legislation will pass. It might not be the legislation that we want. Does that mean you think that certain elements are going to be left out?
Yeah, I don't know which ones, but I think the yield thing is going to be a big deal for these banks. They're going to push back very hard, and lobbying works in the Congress. Remember, it's all about the money, guys. Okay, these guys want to get reelected, and so because of Citizens United, they get an unlimited stream of money from large corporations, and they generally do what the large corporations or the large industries, big banks, big pharma, big food want. Now, that's a whole other topic, and we're in sore need of structural reform at the in the legislative system because of this. But that's what's going to happen. And by the way, we need to accept that, and we need to deal with the world the way it is, not the world that we want it to be. We just have to deal with that and see if we can get the best deal possible. I wouldn't wait till after the midterms because the Republicans like crypto more than the Democrats. And if the Democrats take the House, I think it'll be even slower and a longer and heavier lift. We are, unfortunately, we're the David in this game, okay? They represent Goliath. So I think Fairshake has done a really good job. I think the Sherrod Brown race, where they took an 18-year veteran who was the head of the Senate Banking Committee, knocked him right out of that seat. And guys, it is very hard to dislodge an incumbent. They generally have a 95% reelection rate because they get all the money behind them, and they have an installed base, and they're able to curry favor with the electorate using the system of the government to get themselves reelected. So you have to really applaud Fairshake what they did. And if you ask me, and I did say this in November of 24, I said, hey, crypto turned this election. Helped Donald Trump become president, helped the Republicans win the House and the Senate. And this is one of the reasons why I think this bill is passing.
Yeah.
Because if you talk to Gillibrand, you talk to Schumer, Richie Torres, these are people in my state, they're like, I don't want to go up against Fairshake in the midterm elections. We're better off passing a deal and then turning to Fairshake and say, hey, I supported you guys. Lay off me.
Yeah.
Right? And I think that's the message. And again, when I look at the varying interests, Fairshake is a part of it, and they need to be applauded for the work that they've done.
The sunrise is almost here. The market has been impaired by forced selling and liquidity drains from memecoin ventures, but the structural foundations, regulatory clarity, banking adoption, and the institutional on-ramps from giants like BlackRock and Schwab are stronger than they have ever been. We are dealing with the world as it is, not as we want it to be. And the world as it is right now is a coiled spring waiting for a legislative spark. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.